Building wealth in the stock market doesn't have to be complicated, and you don't need to pick individual stocks to succeed. A well-constructed ETF portfolio can serve as the foundation of your lifelong growth strategy, giving you diversification, stability, and consistent returns. Many investors chase hot stocks or market trends only to experience unnecessary stress and volatility. By focusing on a core set of ETFs, you can capture broad market gains while minimizing risk, all without spending hours researching individual companies. Today, we'll break down exactly how to build a core ETF portfolio that grows with you over time. By the end of this video, you'll know how to combine simplicity, diversification, and strategy to create a portfolio that can support your financial goals for decades. 1. What is a core ETF portfolio? A core ETF portfolio is a collection of exchange-traded funds that forms the central part of your long-term investment strategy. ETFs are investment vehicles that hold a basket of stocks, bonds, or other assets, providing instant diversification. The goal of a core portfolio is to capture broad market growth while reducing risk through diversification across sectors, regions, and asset classes. Many investors rely too heavily on individual stock picking, which increases volatility and risk. A core ETF portfolio simplifies investing by allowing you to own a slice of the overall market. It's designed to be set and grow, requiring minimal maintenance while still generating long-term wealth. Over time, this approach can outperform the majority of active investors who chase short-term return. 2. Why ETFs are ideal for lifelong growth. ETFs combine the advantages of mutual funds with the flexibility of stocks. They often have lower fees than mutual funds, reducing the drag on long-term return. Many ETFs track indexes, giving investors exposure to hundreds or even thousands of companies with a single purchase. This diversification reduces the risk of any one stock or sector dragging down your portfolio. ETFs also allow you to invest globally, gaining exposure to international markets without complex research. Rebalancing a diversified ETF portfolio is simpler than managing dozens of individual stocks. Over time, ETFs compound wealth efficiently because of their broad exposure, low cost, and ease of reinvestment. They make investing accessible for beginners while still serving sophisticated long-term strategies. 3. Choosing your core ETFs. The first step in building a core ETF portfolio is selecting the right ETFs for growth and stability. Many investors focus on U.S. total market ETFs, which provide exposure to a wide range of companies across different sectors. International ETFs diversify geographic risk, allowing you to capture growth in global markets. Bond ETFs add stability and income, balancing equity risk in volatile markets. Some investors include sector or dividend-focused ETFs for additional growth and income opportunities. Choosing a mix of ETFs ensures that your portfolio is well-rounded and resilient through different market cycles. Researching expense ratios, liquidity, and historical performance is essential for maximizing long-term results. By carefully selecting ETFs, you create a foundation that grows steadily over time. 4. Allocating assets in your portfolio. Asset allocation is the process of deciding how much of your portfolio goes into stocks, bonds, and other asset classes. A simple rule of thumb is to allocate more to stocks when you are younger for growth, and gradually increase bonds as you approach retirement for stability. Many core portfolios use a 70-30 or 80-20 stock-to-bond ratio early on, adjusting gradually over time. Diversifying across regions, sectors, and asset classes ensures your portfolio is less sensitive to individual market shocks. Strategic allocation allows you to capture growth while protecting capital during downturns. Rebalancing your portfolio periodically keeps your allocations aligned with your goals. Over time, disciplined allocation compounds wealth efficiently, reducing the need for frequent adjustments or market timing. 5. Rebalancing your ETF portfolio. Rebalancing is the process of adjusting your portfolio to maintain your target allocation. Over time, certain ETFs may grow faster than others, skewing your original allocation. Many investors ignore this and let their portfolio drift, increasing risk without realizing it. Rebalancing brings your portfolio back in line, ensuring risk levels remain consistent. This can be done annually, semi-annually, or whenever allocations deviate significantly. Some investors rebalance by adding new contributions to underweighted ETFs rather than selling, reducing tax implication. Rebalancing keeps your core portfolio aligned with your long-term strategy and prevents emotional reactions to market swing. Discipline in rebalancing is a key factor in achieving predictable, long-term growth. 6. Benefits of a core ETF portfolio. A core ETF portfolio offers stability, diversification, and growth potential with minimal maintenance. Investors avoid the stress of picking individual stocks while capturing the overall market's upward trend. It also provides a framework to add satellite investments, smaller, higher-risk ETFs or stocks, without jeopardizing your core growth. Over time, the combination of disciplined investing, low fees, and broad exposure can outperform actively managed portfolios. Many investors underestimate how compounding works across ETFs, but regular contributions and reinvestment accelerate growth. A core portfolio also allows flexibility to adjust for life events, risk tolerance, or market condition. It is the foundation of long-term wealth-building strategies that can support retirement, passive income, or legacy planning. 7. Common mistakes to avoid. Even with ETFs, investors can make mistakes that reduce potential growth. Chasing high-performing ETFs, over-concentrating in one sector, or failing to rebalance are common errors. Ignoring international diversification or relying solely on equity ETFs increases vulnerability to market swings. Many beginners also overlook fees, which can compound and significantly reduce long-term returns. Avoid trying to time the market. Consistency and a disciplined strategy outperform short-term speculation. Understanding the purpose of each ETF in your portfolio ensures your investments align with long-term objectives. Avoiding these mistakes keeps your core portfolio on track and maximizes lifelong growth potential. 8. Getting started today. Start by determining your financial goals, risk tolerance, and time horizon. Choose a core set of ETFs that covers domestic and international equities, bonds, and other asset classes appropriate for your age and risk profile. Open a brokerage account, set up automated contributions, and focus on consistency. Rebalance periodically and review your allocations as life circumstances change. Keep investing for decades to harness the full power of compounding across a diversified core portfolio. Starting today, even with modest amounts, puts you on a path toward lifelong growth and financial independence. By sticking to a simple, disciplined ETF strategy, you can avoid common pitfalls and achieve reliable wealth accumulation over time. If this video helped you understand how to build a core ETF portfolio for lifelong growth, take action now. Identify your core ETFs, automate contributions, and diversify across regions and asset classes. Share this video with someone looking for a simple wealth-building strategy, subscribe for more investing insights, and hit like to support content that empowers smarter financial decisions. A disciplined core ETF portfolio is your foundation for long-term growth, stability, and financial freedom. Start building your core portfolio today, stay consistent, and watch your wealth grow steadily over decades. Remember, simplicity, consistency, and smart allocation are the keys to lifelong investing success.